afternoon, everybody. How you guys doing? Welcome to California, my home state. It's good to be back. And we're going to be talking about custodians today. A lot happening in that world. I'm Ryan Neal. If you don't know me, I'm the technology editor with Investment News. And joining me today, we got a couple folks from Apex. Do you guys want to start maybe just giving a quick introduction to yourself? And for anybody that doesn't know Apex, maybe a bit about the firm and what you guys do.
Yeah, sure. So why don't I start? My name's Bill Capuzzi. I'm the CEO of Apex. I've been with Apex now since the early days. It's amazing. It's been 8 years at the helm of Apex. Before that, I had founded a company in New York called ConvergeX, but I started my journey, especially in financial services, in the custody space. So I don't know, show of hands, anyone from Pershing here? Okay, no Pershing folks. But I spent almost a decade at Pershing, and I really learned sort of the guts of the industry, and which really led me back to Apex, like I said, 8 years ago.
Okay. Olivia Essinger. I'm General Manager of Advisory for Apex. I set the strategy and work with a phenomenal team. We're building something that's going to resonate in the advisory space. I came from TD Ameritrade, where I spent most of my career, so 10 years. Started as a business analyst, moved into a technology consultant role, was on the practice management team, became a relationship manager, and throughout all that time, became a student of advisory businesses and learned the custodial business really well, was passionate about it, and had the opportunity to come over to a forward-thinking custodian, and have been really happy at Apex.
Great. Thanks. And before we dive into it, I just want to remind everyone that we're using Slido to ask questions. So if you have anything you want to know, please shoot them up or use the app, and we'll see them here. To answer a question that I almost always get, no, I was not out partying last night. This is my voice all the time. That's just how it goes. But I love that you had experience at TD, because I want to start there. The Schwab-TD merger is one of the biggest stories to hit RIAs in a long time. A custodian story, a technology story, and it's really shaking up the industry. So can you give us a little bit about what's going on there and how it's impacting the RIA market?
Yeah, so TD and Schwab coming together, they're controlling roughly $3.4 trillion in advisory assets. And with two large companies like that coming together, they certainly have economies of scale, and their product offering is extensive. I think, Ryan, there's absolutely an opportunity for up-and-coming custodians who can't necessarily compete on economies of scale to do it differently and compete on innovation, right? And that's kind of the definition of innovation, getting really smart people in a room, maybe with limited resources, to build something that's special and is different and is going to resonate. So I think Schwab, for example, and TD, they're a large enterprise, and with a large enterprise comes many clients that they have to keep happy, right? And they're executing on their integration plan like they said they would. Is there an opportunity for a smaller custodian without that big, extensive client base to get in there and think about things differently and kind of in a forward-thinking way of where we know the world is headed? And an example of that could be the service experience, right? At the legacy custodians, it's very much a pick up the phone, call your custodian experience. Can an up-and-coming custodian do something that's a little more self-service and efficient, right? And come at it from the vantage point of, we don't have a lot of RIAs today that are going to be resistant to that change.
Sure.
So I would just add to that. I didn't talk too much about Apex in the beginning. Apex today supports about 300 different firms. There's roughly 23 million end investors that leverage Apex as a custodian. And historically, we've always sort of focused on the left side of the spectrum, right? And the left side meaning the fintechs,
right. Sort
of bleeding edge of the sort of investing world, right? So the Goldman Sachs Marcuses, the SoFis, the Stashes of the world. And I think just to take on from what Olivia said, there's an opportunity to take the things that work within the fintech world and apply them to sort of this more traditional advisory world, right? So a great example of that is, why does it take hours or days to open an account? Why is there DocuSign involved? It's like, doesn't make a lot of sense that there's an incredible amount of inefficiency on the right hand of the spectrum, right? This sort of traditional advisory that most of the folks are out here sort of support. But on the left-hand side, the fintech side of the spectrum, everything is real time, right? The funding is done in 9 seconds or less. You fund the account immediately. ACATs are done automatically. There's no such thing as a NIGO in the world of fintech. How do you take that and apply it to this? Right? And that opportunity, I think, is going to come over the course of the next 12, 18 months, largely because there's going to be this upheaval between the TD and Schwab merger.
Right, absolutely. Now, your company last year in 2021 announced that it was going to be going public. You guys were going to use a SPAC, I believe, to do an IPO. Obviously, that was a big talking point in 2021 in general in the whole industry. And then that fell through kind of near the end of the year. What can you tell us about what happened there, and for any advisors that are maybe considering Apex, and maybe coming where you guys are at as a business these days?
I thought you were going to say, does anyone want advice on using a SPAC, which I would not advise anyone out there. I mean, look, beginning of last year, before things sort of got sort of nuts, the value in looking at a SPAC for us was the speed. Okay, back to kind of what is the ethos of Apex? Like, how do you eliminate friction? And the concept behind the SPAC was, how do you get public quickly so it's not a distraction for the company? And I think what happened wasn't obviously what we thought was going to happen, which is, number one was the SEC slowed down all SPACs, right? Because they wanted to get their arms around it. I think the second part of it is Apex, part of Apex, the Apex family is we provide a crypto solution for both, again, self-directed solutions as well as for advisors. And you can just pick up the paper today, just Google SEC and crypto. The SEC is still trying to get their arms around exactly what crypto is. How is it going to work? And how is it going to fit into this sort of investment thesis? And that in of itself, they leveraged Apex. I spent a lot of time, as a matter of fact, tomorrow I'm going down to see Chairman Gensler to talk more about crypto. So the good news is I think we're on a path as an industry to get the sort of world of digital assets more involved in sort of the broader investment thesis. The hard part is it's going to take some more time, right? And I think the SEC is taking sort of the necessary steps, albeit more slow than I would want it to be, but they're taking the steps to get the industry in a good place as it relates to digital assets.
Right. Do you have anything you want to add?
I think Bill covered it.
Well, if you see Gensler tomorrow, let him know I said hi and to please return my phone calls.
Okay. Well.
He doesn't get back to me all the time. I miss him. Well, anyway, so speaking of crypto, how about some of the stuff as a sort of digital first custodian or digital forward custodian? What do you see in like that next 5 years? Where does things like crypto fit into your plans for advisors? Embedded finance, I know that's another talking point that's huge here at this event. What are you guys doing with that, and where do you see that going? Maybe like a 5-year horizon.
Let me start.
I'll start. Yeah, I think something that we have to pay attention to, and what we're not suggesting, I just want to be clear, is that human advice is going away, right? Human advice is here to stay. We know that 3 in 5 Americans want financial guidance and advice, and they're just unsure of where to get it, right? There's this $53 trillion wealth transfer opportunity. Next generation investors want a sounding board. They want human advice. But you have to look at the growth. We can't ignore the growth that's happening in the online advice space, right, in the fintech space. So depending on how you define online advice, the compound annual growth rate is north of 30% over the last 10 years, right? So they're growing. And I think there's a lot of advisory firms and RA firms out there that think, online advice provider, insert here, they're not competing for my clients, right? Once the clients grow up and they have a certain level of wealth, right, then they're going to come to me. Then they're going to need my advice. And I just don't think, frankly, that's how it's going to play out, right? Like these fintech companies that Apex serves, these robo-advisors that Apex serves, they're serving 32-year-olds. And as those investors age and mature and they have different life events, these firms are smart and they're going to figure it out. And so I think, maybe over the next 1-3 years, advisory firms are going to continue to, be okay. But if they aren't thinking about the next generation of investors, how to position their businesses for success and what enterprise value is going to look like in the next 5-10 years, they're setting themselves up for failure.
Yeah, I think that's interesting. And something I recently learned, I did a 401k rollover, and I went with SoFi. And I learned that Apex works with SoFi because I had to write the check out to Apex Clearing. Full disclosure, I guess. Not really a conflict of interest, but yeah, I mean, I agree with what you're saying. I'm 34. I see what they're doing. They put a whole platform together digitally of banking, credit cards, loans. They have financial advisors on their platform now, retirement. It's really impressive, and I don't necessarily see why can't the rest of the industry do that?
Yeah, I mean, I'll just add to that. I think, again, let's stick to the sort of fintech side of it. The trends over the last 18, 24 months sort of aligned with what Olivia said. You have this self-directed platform. So think, the Weebles, the Robinhoods of the world. They're adding sort of passive investing for sure, and we're helping them, right, to provide that, and for exactly that reason, which is we saw a lot of assets over the course of the first half of this year as the market upheaval happened. People shifted from picking stocks or picking cryptocurrency into more passive investments. So for sure, the fintech self-directed folks are adding more passive investment. The same's happening the other way, which is you have those that started out as robos that are now adding in the ability for folks to be able to choose a stock, right? What are my passions? I like clean energy, okay? I love driving my Tesla. And so I want to buy Tesla, right? And if I'm in this passive portfolio, how do I get access to the things that I care about? And historically, that wasn't there. And what we're seeing now is that those two things are playing against each other, which is one platform, you mentioned SoFi is, I think, a good example, is a platform that allows you to sort of be able to choose an individual stock, but also be able to invest in a portfolio. The last thing I would say is you mentioned embedded finance, which I think is interesting. It's very different than I walked around the conference. The concept of embedded finance that I know is very different than I think what we talk about at the conference. That's more geared towards advisors. The embedded finance that's happening within the sort of world of the sort of fintech is adding investing as a feature versus something that's kind of a business. And what I mean by that is you think about Walmart. Okay, Walmart, you walk into the store and you buy a 32-inch screen TV. It's $400, and you're going to get 2% back in stock. And the stock's going to be Walmart stock. And it's turning consumer into a shareholder, right? And for Walmart, historically, they could never do that because they don't want to get involved in brokerage and the regulations and everything. And because of folks like Apex, someone like Walmart can bring that to life and do that on a scalable basis where there's a fractional share. You 2%, right, of a $400 TV. It's not much Walmart stock. But over time, what they want is for that person to come back in and continue to do that and build that loyalty between the consumer and turn them into an investor.
That's super interesting.
Yeah. We have this. I'm going to tell them about the Venn diagram that we have at Apex. We've got, think two concentric circles. You've got the fintechs and the robos on the left, and the traditional advisory firms, right, delivering human advice on the right. And what we're starting to see is this convergence, right? These firms coming into the middle that are building a more modern, scalable end investor experience while still delivering human advice. And it meets the needs of today's investor, right? Instead of coming into the office and going through sign here stickers and account applications, it's a more digital, instantaneous experience. Instead of sharing voided checks, it's setting up bank instructions electronically. And what it allows the advisory firm to do, especially when you have limited time in any given year to work with end investors, is it allows advisory firms firms to focus on the things that matter, right? The coaching, right? The answering questions that clients have, learning about their lives, and delivering value with the limited time that they have to spend with customers.
Yeah, that makes a lot of sense. And use a moment now, we're starting to get some questions for the audience. Let's top one here. Do you guys just want to give a really quick overview for these folks maybe on just everything that Apex does offer? Because I know it's a lot. It's clearing and custody, technology, but what else do you want to add to that?
Yeah, so Apex is a platform, right? So think of us purely B2B technology platform that at the core, we custody the asset, right? So we'll do the account opening, funding of accounts, all of the trading, whether it's an equity, an option, future, fixed income, mutual fund, ETFs, cryptocurrency, NFTs, whatever it is that someone wants to invest in, we'll provide the ability for them to do so. All of the things around money movements in or out, all of the tax, and then all of the settlement, right? And I think the differentiation versus the folks that you guys all know, right, the Schwabs, the Fidelities, is we're sort of maniacal about how do you take friction out of all of those things, right? This concept of NIGO, we don't talk about NIGOs at Apex because there's an instantaneous response, right? You use an API, you get back immediately what's wrong with that account, immediately, versus this concept of NIGO. So that entire platform, folks sit on top of us, folks like eToro, folks like SoFi, and they're great at their part, which is the customer interaction, the amazing experience that customer has, and our job is sort of that man or woman behind the curtain, sort of bring that all to life in a really digital way.
Gotcha, great.
How'd I do?
Good. And can I hit on advisory specifically?
Absolutely,
Yeah.
please do.
And so as we think about advisory at Apex, our mission very much aligns with Apex's company mission. So how do we help advisors reach all investors, more investors? And then what we're going to do really well is integration and driving operational efficiency and straight through process, right, and processing. And when you put those two together, right, integration, technology choice, making the advisory technology landscape better through integration and straight through processing, what you get is a better, more scalable end investor experience. So that's our focus in advisory at Apex.
So that a traditional RIA can operate and look more like some of the tech firms and the ease of use that they have.
Correct.
Yeah.
Yeah. Go ahead.
Well, I was going to say, and that allows them to scale down, right? So you think about, I've met a few folks here today, is one obvious question or question I often ask advisors, what's the minimum size of an account? And it's somewhere in that $100,000, $150,000, $200,000, and that to me is so odd, right? Because why not be able to support someone that has $10,000 in the account? To the extent you can do it in an electronic way and be able to support that client, because that, we talked about you in 10 years as you continue to sort of evolve. I think with the wealth transfer that's going to happen and with the technology that's out there today, I think that you're going to move to your dad or your mom's advisor. I think that's going to continue to break over time, right? Largely because of better experiences.
Yeah. Well, given how much travel and partying my parents are doing in retirement, I'm not expecting.
There's not going to be any
I'm not
left.
expecting a whole lot to come my way, to be totally honest. But it's good for them. So we wanted to talk about challenges facing the advisor, and I think one of the questions we got hits on this. Someone talked about how traditional move money processes, ACH and wire, that kind of stuff, is still clunky and slow. Do you find that's a big challenge that advisors are still facing? And the person wanted to know, do you see it improving, and how?
Yeah, yes, I do think the operational processes, which by the way, they're operational, but they impact the end investor experience.
Yep.
The account opening is like one of your early impressions with a new client that's working with you, and you're filling out physical paperwork, you've got the sign here stickers, or you're using DocuSign, and then the legacy custodian somehow in the process of getting the information in the system, there's typos, and then the client's name is spelled wrong. I mean, it's just not a good first impression. It's certainly not what modern investors are looking for. Money movement, setting up bank instructions, same thing. And then I'd even take it a step further into investment management, right? So advisory firms that have models for, their 500K or $1 million plus investors, and they try to take on a, quote unquote smaller account, and it just doesn't work, right? The account size isn't big enough. And so I see that is going to change. We're driving operational efficiency in the portfolio management process with fractional shares and notional trading, where advisory firms can essentially run the same strategies if the risk tolerance is appropriate for clients of all sizes, not just for their high net worth clients.
Sure. All right, well, I'm going to go off script a little bit. I kind of warned you this would happen, but speaking of like smaller accounts and maybe smaller advisory firms, that's a big part of the conversation with this merger that's happening, right? I know TD was very popular with a lot of smaller advisors, and there's worry about how that's going to happen. I know Charles Schwab, when they talk to me and other reporters, talks about their support for small advisors, but there's concern out there. Are you hearing these conversations? Are you starting to hear from advisors about, we're maybe a planning firm that doesn't have a lot of assets under management? Are they looking at Apex as maybe a provider for that?
Yeah, so I think with change, right, comes uncertainty, hesitancy, questioning, and initially when Bill and I were having discussions about who do we want to be in the advisory space, we were throwing around these AUM figures. Maybe it's less than 200 million because those are the underserved advisors, or maybe it's the larger advisors, and this barbell approach, and it just didn't make sense. And we're like, stop this. This is not Apex. And really who we're focused on and who we serve well are firms with a progressive leadership team that are thinking about growing their enterprise value and positioning their businesses for success in the future. And so, that's our core focus at Apex. Yeah, I mean, there's going to be opportunity. I mean, with change comes opportunity, but we're not going to change our company focus and mission just because there's a market event happening, this year. So, Bill, what would you add?
No, I think spot on. I mean, look, the reality is there's a better way. I think it's obviously going to create some upheaval in the industry. One of the challenges, one of the frustrations for me is that there's just inertia, right? People don't want to change. They don't want to change platforms. They don't want to change custodians. I think it's going to create an event that's going to force people to at least pick their heads up and look.
Sure.
And there is a better way, right? So the question around like clunky ACH and wires, like it's not clunky and time consuming for us. So yeah, just use Apex and it gets it gets a lot better. So I do think it's going to create some opportunity, but I think as Olivia said, it's not about big or small for us. And the only discernible pattern in terms of the folks that we work with today on the advisory side is how progressive is the leader, right? So somebody like Lule at eToro, like progressive leaders that are leaning in and thinking about their practice in 5 and 10 years from now, right? The things we do or don't do as an industry today are going to play out over the course of the next 5 years. They just are. And so the opportunities are there, and for those that want to lean in, I think there's a big opportunity to grab more market share.
Great. Well, so next question we have from the audience, and I have a suspicion that this came from one of my fellow reporters in the audience, because it's a very good question. But so kind of speaking on the IPO plans and building up that, is it your long-term plan to stay independent, or are you maybe looking to get acquired one of these days from a larger player?
Yeah, I mean, we have no aspiration of getting acquired. I think the opportunity's there. Frankly, I think the industry loses if we get acquired by someone larger, to be honest. I think there's so much we can and should be doing as a company to help drive change. Obviously, the things we've done on the fintech side, applying that to the advisory side, I think is sort of the mission for us on a go-forward basis. And so, private company, we have no outside money in Apex. We talked a little bit about going public last year. Solidly profitable as a company, so we don't need the money as a company. And I think the path for us, if the markets come back around over the course of the next 24 months, maybe we'll take another run at going public. Otherwise, we'll keep doing what we're doing.
Great. And there's certainly been a lot of reports about that. The IPO market, I think, is like historically slow this year.
Yep.
A lot of folks are sort of waiting that out, right? And then I guess maybe building on that question, someone else asked about Goldman Sachs entering the custodial space. I personally think they're one of the most fascinating companies to watch. Obviously, everyone knows the name. They're investment banking, and now they're really making a concerted push into wealth management space. United Capital and Marcus and all that kind of stuff. But what do you guys think about them and their custodial aspirations?
So I mentioned in the beginning, I mean, we custody for Goldman Sachs Marcus. At least on the fintech side, one side of Goldman, they use Apex today. Look, they acquired Folio a number of years ago. I think it's a good thing, right? Because again, I think there's competition. I think the industry, if you look at that KITSIS placemat that we all look at, there's, I don't know, 300, 400 different logos that are on that for the front office. And then when you look at the custodial landscape, it's Pershing, Schwab, TD, and Fidelity, right? There's three. The industry needs more. They need more Apexes. They need more, Goldman Sachs's to get involved and drive change, because I think that's good for all the folks that are here at the conference. It's good for the industry.
Makes sense. Do you want to add to that at all?
No, I love how Bill talks about the swim lanes at Apex, and I think it's relevant to what we're talking about with Goldman Sachs. And Bill, you do it better than I do, so.
Yeah, that makes sense.
Yeah.
We had one more question here, and I think this might be a question for me. I don't know if you asked this and you're brave enough to. So they said, why don't you expand your partnership with SoFi as your primary platform? I don't know if it's for me. I might. I think they're great. I'm not trying to shill for anybody here. I was just really impressed with. They got advisors and my IRA, and I don't know. I thought they're great. So, but I don't know. I did. I don't think that was a question for you guys. But do you have anything to add about your partnership?
I would
with
just
SoFi?
say, look, the other part I would say is we are squarely B2B, and we'll stay B2B. Right? We were talking in a meeting today about. I have CNBC usually run in the background in my office, and I always find it odd, the commercials that are run for, sorry if there's Schwab people here, the commercials where the Schwab advisor versus intelligent portfolios, there's a conflict there, right? And for us, partnering with folks like SoFi, folks like eToro, some of the more disruptive advisors that are out there, really on a purely B2B basis, where our job is to effectively make them look great. We're going to continue to stay in that swim lane, stay purely B2B.
Right. And do you still hear that concern from advisors? I remember when I first entered about 6-7 years ago, writing about this industry, a lot of concerns about that conflict. The advisors have their business with Schwab or the other consumer-facing custodians as well. Do you still hear that? Is that still a concern that advisors have, or have people kind of learned that they can play nice together?
Yeah, so when I had mentioned the swim lane analogy, right? You have custodians, asset managers, technology companies, advisors, right? Advisory services, like merging together at a lot of the custodians. And so I think, yes, there's still concern that advisors want to work with a custodian that is maniacally focused on building better infrastructure to solely support their business. And part of that is collaborating, right, with the technology companies and with the asset managers and bringing the community together better in a way that supports advisors. So I think, yeah, that is a concern. And as a company, right, you only have so many resources, right? And you have so much time and intellectual capital that you're going to invest in the business. And I would have to think if I was an advisor, I'd want to know that my custodian was really focused on helping me elevate my business.
Yeah, great. I think we've got time for one more here. We got a couple minutes left, but someone asked, why is the custodial space so small? Why have there churches been like there's the big four, now it's the big three, and there's some other folks such as yourself out there. But why is that? Why has it been such a a market that's really consolidated at the top?
I mean,
I don't know.
It's hard to do what we do. I mean, I think when you think about the things I mentioned before, opening accounts, funding, trading, sending out 1099s, confirm statements, settling trades, you have to have a tremendous amount of capital to support the business. It's hard to do this, right? It really is. And, there's folks out there that have tried to do it, build great technology around those things I just mentioned. But there's a massive regulatory regime that goes along with our industry. And so you take this really complex series of functions, the capital that's needed to support that, and a sort of Byzantine regulatory environment. Mix that together, it's just hard to do. right? And so there's been lots of folks that have tried, to get into the space. I think, the challenge is again, to do it really well. It takes this sort of secret sauce, superpower, so to speak, of great technology and sort of really understanding the industry at a really deep level.
Great. Well, I think that's about the time we have. Real quick, I don't know if you're a football fan, but can my 49ers turn it around, or should I give up on the season after week 1? Are they done?
I don't have a crystal ball on that one.
All right. No, all right. Well, thank you very much, guys. And thank you, everyone, for attending and sending your great questions. It was awesome. Appreciate it. Enjoy the rest of the week.